Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Thursday, 7th day of March 2019, and this is the Daily Report for Gold and Silver. Although you wouldn't know it by the net change of gold today, there were buyers in the market actually bidding the precious yellow metal up higher. It was dollar strength that more than compensated for any kind of buying that came into the market. In fact, when we look at spot gold was down about $1.20 today, but that is because the dollar strength actually accounted for $10.40 of negative impact on gold, whereas buying gave it a positive $9.20. And that's where we got that slight decline on the day. It really was all about the euro dollar. The euro dollar really fell out of bed today. It went to a 4-month low and in essence lost well over a full percent. What I am looking at this point is whether or not the Fed begins to loosen up a little bit, which is what we're getting hints of, because once that happens, we will see dollar weakness return in the market and we should see a nice pop in gold pricing. As to the prices themselves, gold in terms of futures today, well, they closed lower by about $1.50 on the day at $12.8610. Silver also traded lower on the day, closing off by about 4.5 cents at $15.04. Platinum closed lower on the day as well, and that closed at $815.20, down almost $13. And the same with palladium. Palladium had the smallest net loss today, only down about $1.60 at $14.8480. But I do want to take a look at the dollar, because the dollar itself was strong, up almost 0.8%, over 0.8% at 97.60. And you can see that as it relates to the euro dollar, down well over 1% on the day. Let's take a look at our technical studies. Traders, typically I start the show by looking at a gold chart, maybe a silver chart, but on today's show, we really need to focus on the move in the dollar, because that is the most dynamic influence we saw today. This is a daily candlestick chart, and take a look at how this market really popped up right up to a resistance point. I'm showing current resistance at 97.70, but realize that is a technical level of resistance, and if the euro continues to weaken, then we could see a little bit more strength in the dollar. However, for right now, we had this tremendous pop, and this pop in the dollar is fully responsible for the net change in gold, because there were actually traders bidding up the precious yellow metal. And traders, I've just put up the Kitco Gold Index, and the Kitco Gold Index, of course, covers spot gold. And as you can see, spot gold closed off by $1.20 today and is currently fixed at $12.8480. But on closer inspection, what we really can see is it was dollar strength that actually took away $10.40 of value, and buying actually added $9.20 worth of value, and that's what's accounting for the marginal sell-off in gold prices today. And traders, I have just pulled up a daily chart of the euro dollar, and realize compared to the dollar index itself, the euro accounts for about 58% of the overall basket of currencies. It is definitely the currency with the greatest amount of weight. You can see the low that came in, and that dramatically moved the dollar higher, and that's what held gold back in terms of any kind of upside price swing today. And so now, as we look at gold pricing today, and this of course is April futures, we can see that the change was fractional, but it was lower, currently trading off by about $1.70 at $12.8590. What I am seeing here is the fact that I do believe that this market is attempting to form a base in this particular price point, just under the 38% retracement. We know that it could go as low as the 50%, technically speaking, because we do have a series of lows that came in back in January of this year, but I really believe that that is about as low as we'll see the market go. However, until we see some upside pop in gold pricing, I find it hard to issue any kind of a buy signal. I don't necessarily need to see it go above the 50-day moving average because it's still well above the 100 and 200-day moving average, but I do need to see a pop and a close above 1291.50, and that of course is the 0.38% retracement, and that is a level that I'll feel comfortable buying at. We're not all that far away from it, just a couple of dollars. And really, I think what we'll need to see the market move to the upside is going to be a return to either a neutral dollar or a dollar that's falling. And there were some statements that came out by some Fed members today talking about a loosening of their current monetary stance. And if that in fact happens, we could see the dollar lose some tremendous ground because the euro has already made the low, and any kind of talk from the Fed about easing their monetary policy, in other words, more dovish talk, we would see the dollar weaken, and that alone would drive gold pricing higher. However, for right now, what we're seeing is a series of doji-like candles, meaning very, very small-bodied candles, and we are still maintaining lows that are coming in at about equal points, and we have still not taken out this one key level, which I believe is 1291, and it is the 0.38% retracement. Until that happens, we will maintain a flat or neutral position with no active trades in gold. And traders, lastly, I do want to take a quick look at silver. Silver, I am not bullish at all on. We really need to see this market trade above 1527. It is currently flirting with $15 per ounce at 1503. We can see that we've had some strong down days. It is currently tracking below all three major moving averages, the 50-day, the 200-day, and the 100-day. The other thing that we need to notice is the inversion of the 100 to 200-day moving average. In a bullish market, you're going to get the lowest moving average, meaning the 50 on top, followed by the 100, then followed by the 200-day moving average. We are certainly not seeing that. In terms of major support, we have to look at these tops that come in right in this area here as a level of real potential support. And traders, that really doesn't come in till about 1485. We could easily see silver trail and break below $15 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.